A lot of developments to talk about in the market in today's video. But first of all, I want to go over to the calendar here because we do have New Year's Eve and New Year's Day this week. Important to note, New Year's Eve is a completely normal trading day. So it's not a half day. It's not off. Normal hours throughout the day. However, New Year's Day is completely off. So that's the only day that we have off or abnormal hours as of this week. So keep that in mind. That's Wednesday of this week. Regardless, going to the video here, I do want to talk about SPY dark pool prints because we saw a very unusual amount, as you can see over here last week. We really haven't seen prints like these in months now, which is incredible. Maybe the occasional spike during OPEX days, kind of like what we saw on December 20th, if you remember that OPEX. But still, this is very uncommon for a normal week, all things considered, especially during a seasonally low volume period like we saw last week, because remember, a Wednesday was off because that was Christmas, and then Tuesday was Christmas Eve. So I just want to show you these really quick. You can see $3 billion worth at the 601.21 level, $2.4 billion worth at the 601.22 level, only a 1 cent spread in between both of these, and then $2.2 billion at the 601.26 level. So this is a 5 cent spread in between 3 billion, 2.4 billion, and 2.2 billion in prints. So the total amount of that would be well over 7 billion in premium. Whenever I see something at least over 5 billion in premium all around the same area, that's something I immediately go over to the chart and then mark on my chart because that is going to be an important level. And something interesting with it, if we go to that 601, roughly 22, we'll call it level, this is right near the high of day, just about before we had this major dump on Friday. So you can see over here, 601.22 throughout the day. This ended up being the closing price as well, which is pretty interesting there. Also was the high of day back here from Tuesday, if you remember where it closed over here. So pretty interesting that price closed there twice, basically on back-to-back days because Christmas was off. But all things considered, this seemed to be a form of distribution before we saw price dump the next day. We had a major gap down and then just continued to fall thereafter. So this level, 601.22, is going to be very critical for bulls to reclaim if they want to see more upside. If you remember in last week's video, I mentioned if bulls were able to reclaim this critical trend line, this one over here, I drew it out. If you remember that one, it goes all the way back, goes quite a while, but you can see it connects from over here on that pivot and then all the way down to over here. We see this low, this higher low actually over here on August 7th. But basically this trend line, once we reclaimed it, we could see that upside move to retest the previous range at 602.70, which it did. Basically, it was off by a couple cents. But because it was unable to reclaim the range, and the range is this, by the way, that I'm talking about, between 608.46 and 602.70, because it never reclaimed the range, we just saw a rejection off of that. So as of now, those dark pool prints seem to be heavy distribution up here. And until bulls can reclaim that 601.22 level bare minimum, we're going to see a lot more chop and potentially a drop from over here. So that is why dark pool prints can be so critical at certain levels. This is the bias level now. As long as we stay within this 590 to 600 or so range, this is going to be the level that bulls have to reclaim in order to establish continuation. Otherwise, I quite literally will not trade SPY between this range because I know there's a high likelihood that we are either going to go like this in between the range and just chop, or it's just going to continue to fall because of this heavy distribution from up here, over $7 billion worth of dark pool prints. That's nothing to bat an eye on. So my personal trade setup that I'm waiting on is, well, one, I want to see it reclaim this critical trend line over here. That's the first, that's like a starter because it needs to get above here. Until it gets above here, then we can be looking at a lot more drop or continuation to this drop from Friday, kind of like where this rough sketch would be, this scribble that I drew on the chart. But this would be the first level that we have to get back over here. Roughly, Dangle makes the price change with time, but around 597 high, 598 or so. This would be the first level. But then we need to reclaim, like I said, 601.22. Above here, you're looking at a lot more clear skies, likely to get back to this 608.46 level near the previous high of the range. But until that happens, I'm not taking a trade, like I said, in this range. So watching for 601.22. If it decides to dump for some reason, then I'd be patient and wait to see, will it form either a higher low, kind of like what we have right now around this 590 level, or will it decide to make a lower low, which in that case, I would hold off and just sit cash for a bit. So to keep it simple and just summarize it, above 601.22, I'm very bullish looking at long setups between 590 and roughly 600. That is just chop, not interested in trading that. And then below 590, you want to see some type of a higher low form around this range. Otherwise, this is something that can drop into the 560s next if it's able to break below 580. So that's the plan, at least for this week and potentially into next week. This is a critical juncture. We'll see what happens if it's able to form that higher low and reclaim 601 or not. But that's my plan for SPY. And based on the flow that we saw, it really was not anything crazy last week. Like if we just go to Friday, for example, there was some put flow. So that's definitely an uptick that's different than what we were seeing previously, because we hadn't really seen that much put flow, all things considered, in 2024. It just was straight up to the upside for the most part, with just minor corrections along the way. But there were a couple 590 puts, so that's near the money. Over here, 570 put, so a little bit out the money, 1.3 million. So it was a bit more put heavy than normal on Friday, but still nothing insane where we saw multiple like $5 million plus orders at all. So nothing to really be too concerned about yet, but it is something to watch because it's different than the amount of calls that we had seen in previous months throughout 2024. But realistically, we should get a good idea of where the market wants to go early this week. Now, the next setup that I want to show you, and this is the last one in the video, is AMD. So this is a purely technical setup that I found, but we can check the flow in a second to see if it complements. But essentially, I'll show you here where I formed this trend line. Started this trend line over on this major low from back in May, so May 3rd of 2024. And then I drew it across, because you can see over here, I found a nice support over here, a nice initial support on this day. We had a little bit fall under, but then it picked up almost immediately and was able to reclaim it, started a rally. And then over here, found a support, and then pretty much the same thing as we saw last time, fell below for a minor amount of time and actually undercut this low. So a quick liquidity grab under a major low from August 5th. Remember that drawdown, that big VIX spike. And then now it was able to reclaim this trend line yet again on the daily and the weekly. So this is a setup I really like for a couple of reasons. One, it was able to hold above a critical trend line. I deem this to be a critical trend line. Two, it undercut a major low, but then popped soon after, was able to close back above on the daily and the weekly. That's critical because if you're familiar, the market likes to do stop raids under major lows, whether it be intraday or even on a daily basis, and has that liquidity grab under that major low, which would be that August 5th low in this case, which would be nice for potential upside from here, get the people off guard, all the participants off guard, think it's going to fall a lot lower, and then rip it in the other direction. It's pretty common market mechanics. And then over here, you could see there is a higher low so far, kind of what I want to see on SPY around this 590 level. Basically the same just on the daily. So we have a couple bullish technical aspects to it. So I like to see that based on the higher low that formed and how it picked up on the candle. I would say if we go to the 15-minute chart, the best risk in this case is a 15-minute close under this low. So roughly 122.28. So this level going into this week is going to be my risk, and my entry will be anywhere up here above this trend line. So around 124 to 125 at the highest, I'd like to enter, looking at about a 3-point risk trade for a lot more potential reward, because this is something I could see go all the way up to 132 as an initial target. So you're looking at about 7 points of upside initially, where you could still see runners continue a lot higher for 3 points of risk. Not too shabby of a setup, because again, I hold runners and I hold those runners to the high 130s afterwards. So I like this. Also, if you're familiar with this pattern of inverse head and shoulder, pretty common one. This is a bullish pattern over here. Left shoulder, head, right shoulder. There's a lot of bullish technical reasons to take this setup. I like it personally. Good risk reward. That's always the last thing that I need to look for. If I find a lot of bullish technicals, that's great, but I still need to figure out the risk reward, because that's everything in a setup. This also fits that criteria. So a lot of good things about AMD. The one thing that concerns me would be if SPY were to undercut this 590 level. So let's say I take this setup come Monday, so tomorrow around, 125, 124, and then SPY just tanks straight through 590, is unable to reclaim it. There's potential that it's going straight for this low and is going to make a lower low. That, of course, would invalidate this setup, because if SPY falls below the low, then we're going to see everything else fall along with it, especially semiconductors. At least that's been the theme lately. So that'd be the one concern. Otherwise, if SPY is able to hold above that 590 level, then this is a great setup, all things considered. Could see this going into if we look over here, something like a drawdown and then upside from there into the 130s after. So that's what I'm looking for. Let's look at the flow. I actually haven't looked at the flow yet, so there's nothing on Friday. Not a good sign, at least for some complement with the flow, but we'll check at the historical analysis for last week and see if there was anything interesting. We can see over here, actually more so puts from earlier on in the week. So these were short dated though, so these all expired. So 12/27, not going to really hurt, at least for the setup that I'm looking for, which would be about a 1 to 3 week hold. All these have been expired and then mostly call monetization afterwards. At least that's what it seems. And these were for the February expiration. So really nothing to complement upside, but also nothing that's pointing towards downside. Also good to look at NVIDIA as well, just because these are tied pretty closely. We can see over here a nice call print, 1.6 million for the 132 strikes. That's a little bit in the money. That one actually has a pretty far dated expiration, so it's mostly useless to me. But a lot of leaps were bought. It looks like the 132 strike leaps for calls, that is. So 2026 really doesn't look like too much, all things considered, especially for NVIDIA. You want to see pretty decisive prints, which we haven't really seen much of. This 136 put would be interesting to me, but there's nothing to back it. I like to look for multiple together. So like 3 or 4 of these types of puts all together would be nice. It's a continuous flow, but that wasn't the case here. We saw a call sell. So really nothing too directional in nature. So again, a call, this would basically invalidate that put we saw from earlier. Nothing directional, all things considered, be something I'm watching for this week. But like I said, this is purely technical. I found it based on the technicals just from scanning major tickers on my watch list. And I found this one. So haven't seen any flow yet, but it's always good to see that confirmation bias if you're able to in the flow. We'll see if that happens this week. Regardless, Happy New Year's to all of you. See you guys next year.